Welcome to Srilanka Live News Capsule. For the first time in 20 years, Sri Lanka's trade balance recorded a surplus of $21 million. The trend is likely to continue in July as well. However, inflation continues to rise, and this week, import restrictions were imposed on more than 300 items, which in the mid to longer term may seem counterproductive to Sri Lanka's economic goals. I chatted with economist at Frontier Research and former consultant at the ADB, Chayu Damsinghe, for some explanations. Chayu, with imports being restricted and the positive trade balance over the last 2 months, would that mean that we really don't need that IMF bailout?
I don't think that means that we don't need an IMF program anymore. This is just a one short, very short-term solution. So the IMF is part of the next bit of the solution, making sure that we get out of this properly, that we have the money to deal with it. Because the import compression that we're going through right now comes with the massive recession. So unless we want to maintain that recession, we'll have to come out of this situation, and then the IMF package, then the multilateral financing that opens up, then the ability for us to deal with the debt restructuring after that. All of that is part and parcel of the same. So we definitely do still need to go ahead with that same pathway. There is no real alternative outside of the short term for that.
So just this week, restrictions were imposed on more than 300 items, and some of these were machinery and tools required for the local industry. Aren't we just putting another hurdle in place at a time when we are actually striving to increase our trade surplus?
The reason import restriction very much, a little bit on consumer goods, but a lot of it on investment goods as well. And that, once again, I think comes from the fact that the government is, for some reason or the other, trying to conserve more foreign exchange right now. So then there is a little bit of a contradiction. If we are already meeting our trade requirements, why do we need further import bans? That is a question, and that remains unanswered still. Hopefully we get more clarity on that in the days to come. Our export growth has mostly come from the larger exporters, and the import compression, especially for domestic consumption related imports, that's not just direct consumer imports, but imports required for domestic production, have been falling as a result of that sharp recession we're in.
So inflation has continued to skyrocket, with July inflation at 66.7% and food inflation at a whopping 82% year on year. However, CBSL Governor Nandalal Veerasinghe is optimistic and on record saying that inflation will not surpass 70% as projected in 2022. Is this realistic?
The rising inflation after the big surge that happened as a result of the depreciation of the currency, and that depreciation itself was driven by the imbalance in our dollars inflows and outflows of the last year or even longer. And now the inflation is mostly driven by adjustments on prices. So electricity tariffs, water tariffs, the recent kerosene price increase, these things could feed into inflation moving forward. But as long as the rupee does not see another sharp depreciation, the demand side of what causes inflation is already being handled.
Keep us on your radar, subscribe and follow us on YouTube, Facebook, Instagram and LinkedIn.
We are here to better your lives and champion your every goal. With 12 billion rupees worth of customer benefits in 2020 and a life insurance fund worth over 100 billion rupees, our strength is your strength. You focus on your goals. We will take care of the risks. Srilanka Life.